All right, folks, Josh Taylor, and we're going to go through a bunch of charts today, basically doing the market preview for the week of October 15th, 2012. And we're doing this is the Forex market preview. And the first pair we're looking at here is the New Zealand dollar yen. Now, this is off the daily chart, and you can see here that since June 1st, that we've pretty much had an uptick. That prices continued to move up. We've had higher highs, up, and higher lows, which is indicative of an uptrending market. Until recently, however, which is, let's see what this candle here is. Right around this time, we had a pretty strong rejection wick on around the September 19th, and slowly but surely, though prices continue to move up on the bottom, this level here, the 63.77 area, 75, 70-ish, all in this area, we seem to hit a base. You can see that even though we've continued hitting the base, that price is now on a daily, off these daily candles, is continuing to push down. We've seen pretty strong rejection wicks, and prices consolidating into you can tell here that these wicks are getting smaller and smaller and smaller. The candles are getting smaller and smaller and smaller, and they're kind of wedging themselves into this little triangle-based pattern. So what we're going to be looking at, I'd be very cautious on trading this pair. I did take a trade off of this a few days ago, a long position for our ProSignals Direct and our Mirror Trader Pro trade copier customers, but I'd be very careful. I'm not really sure what this pair is about to do here because it's showing signs of both. You can see long-term uptrend, but short-term we're getting a push to the bottom, which could be either selling pressure or the lack of buying pressure. We're not really sure. So what I'm going to be expecting here over the next few days, a breakout of some at some level. So I'm going to be very cautious on this pair for a little while until it determines whether it's going to break north or south, and then we'll come back and look at that a little bit later. Or here we are at the Euro USD. Now here's what we've seen here. This candle, starting right here, began the beginning of an uptrend, which was July 24th, 2012, which this pair is basically run up about 1,000 pips in a little less than 2 months, about 7-week period time frame. And you can see here that we had this trend line, and price was continuing to move up this trend line until the 7th of September, when price literally just shot through the roof. Okay, and we usually, when you have a very strong break up to that point, we are going to see a retracement and a pullback, which we have seen. Price has been basically now in a semi-consolidation level here for the past few weeks, bouncing between the 128.50 range to the 1.3000 range. But here's what I am expecting in this pair. You can see that price did slowly try to break out of this trend from the original trend, and then broke back in. I am expecting that price will pull back, what we're hoping for at least, anywhere from the 129 level to the 128.50 level, where I am going to be interested in a long position, because I think the way that price is wedging in here on an upward trending pattern here, that price is going to continue breaking up, especially because of the fact that we have serious US dollar weakness, and no matter how much our current government continues to lie and say that we went from 8.2% unemployment to 7.8 in a matter of a month, which is a crock of crap. Everybody's realizing, especially traders out there in the market, realize that it was a bunch of fudged numbers and lies. So what I'm expecting here is price to pull back a little bit. We need a pullback. If we buy in anywhere in this range here, you're taking a chance. You really need to buy close down to the trend line or below, because this 128 base or 128.50-ish base in that area, wait for a pullback, set your stop down in this area here, and watch this thing jack up. Another thing that could happen is that we may not get the pullback because we're at 129.51 right now. If price breaks through this level and holds, we need a good candle or two to close above this level. Then I would be waiting for a pullback down to 1.3 as a retracement, take a buy position there, and then let this thing shoot up. I do think that if price does continue to break up through this range, that we are looking at the 13300 to 13400 range as a potential move up. So let's go to the next pair. All right, we're looking at the Euro Yen daily chart, and the same thing, pretty much the same exact situation as the Euro. We are continuing to climb up. We took a sharp run up. Wasn't quite as sharp as the Euro USD because it's the Euro. Anything against the US dollar is, especially the pound and the dollar and the Euro against the US dollar, have had an extremely high paced upswing, but this upswing was still pretty strong nonetheless. It was a very quick run up, and then we had a pullback over about a week and a half period of time, a consolidation, and now prices broke through this key level of 101, which was a very strong support level here. And I guarantee we scroll this thing back in history, we're going to see that 101 is a very strong level. And pulled back to the trend line, even though it's floated around above and beyond slightly, it's continued to stay in that area, and now it seems like it's pushing its way back into this line here. So basically, when we're picking optimal entry points, we need to look at a multiple layered confluence of events. So we have an uptrend and we have a base here at the 101 mark. Okay, now what I would expect that price is probably going to end up doing here is going to probably retest the 101 mark, probably drop down even further. It could, and then we would be looking for an entry somewhere in this range, and that's up to you, but I'm just showing my market outlook. I'm not saying take any of these trades, but I would for me to take an entry into a trade like this, I would not jump in right now. Though it is at the bottom of the trend line, I would expect, now that it's Sunday going into Monday, that we could have some market swing backs, especially since we almost have a new level of a kind of a trend line kind of pushing in this level. It's not really much of one, but what I'm saying is price is broken down below and come up. It's not quite holding as strong. But I would expect that it would break below this 101 level and then pull back through again, like it seems to continue to be doing. So we want to make sure that when we are taking a trade, especially when you're taking a trade, a long position, that we are only picking optimal entry points, and we don't jump in on no man's land. No man's land is just jumping in a trade because it starts going up. Now this trade right now is kind of in no man's land. I would wait for the trade to pull back to a very strong level, set a stop. You can see right here, where would you set stops? You could set stops in this range here, below these areas here, here, below these areas. Now your stop is too deep. Now remember, when you place your stops, you had to go back to our equity management videos, that the reality is the wider your stop, the less lots you're going to be trading. So everything needs to be calculated. If you're going to calculate risk 1% of your account balance or 2%, whatever your risk level is, the deeper your stop, the bigger your stop, the wider your stop, the less lots that you're going to be able to trade. So you want to make sure that in order to increase your lots, you don't just jump in a trade in what's called no man's land. Wait for a pullback down to a key level, and then take the trade in the direction of the trend. All right, the US dollar yen pair. You can see that here that we've been basically running in a sideways channel for quite some time. It broke out of the channel, came back into the channel. And what do you do when we trade ranges? And we talked about this in some of my other videos. When we trade the ranges, you trade the tops and bottoms of the ranges, especially if it's a complete sideways running market. So we would take buy positions here, you sell here, close your profits in this range, sell here again, close your profits in this range, buy here. You can see that though that price is broken down a couple times, a little bit down to the 77.50 level, which is showing that price is attempting to break out of this range. In fact, let me mark that off. And one thing we've noticed here, that since around this time, which is April 20th-ish, in fact before that, price, even though it is in a sideways channel, price has continued to drop down. You can see that here since around the 15th of March 2012, that price has continued to work its way down. It may go in a range sideways for a while, goes down sideways for a while, and now as we see it trying to push down, you can see that this trend line is continuing to hold since April 20th, down, 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 down. I did take a couple buy positions down here around the 77.50 range and pulled some profits out, but right now you can see that price is the wicks, not the wicks, I apologize, the candles are getting smaller and smaller. and this trend is continuing to hold. I'd be looking to sell this pair, especially the fact that we are looking at US dollar weakness, and I expect US dollar weakness for a good several months from now. So I'm actually looking to sell this pair around this range here over the next day, and it looks like this thing could hit here very quickly, which is right around here ish, which is what, 78.65 range. Of course, I would put my stop. Obviously, we have to put our stop above this trend line, but it's not just a trend line. We also have some key levels here, one being the 7,900 range. So I'd probably put the support, the stop of 20 pips above the 7,900 range, and then sell, and I'd be looking at a profit target here and below. And probably on this one, depending on if we get this thing to run down into a whole new channel, that we may want to let this trade run for a little while until it gasses itself out. We talked about that in some of our other videos about how you close out partial positions in a trade until it completely gets stopped out in profit on the remaining lots. But anyway, let's go check out another trade, another currency pair, and see what we've got going on. All right, the pound dollar. This is the pound dollar daily chart, and you can see here that the pound has had tremendous strength against the US dollar. In fact, we've moved up almost 800 pips since August, beginning of August, so we're talking about it in just a few months. And we've had a pullback from the 16300 mark here all the way down to the 160. Now, what we've seen over the last few days is we've seen a changeover here. We're starting to see more momentum again against the US dollar. What we don't know up until this point is whether it's going to hold. Whether this is going to be a fake reversal, people are going to start buying, and next thing you know, it tanks down, or if this thing is going to continue to hold. So I'm going to be watching price very closely on this one. I'm not going to enter this trade quite yet because I'm not sure if this thing breaks through this level. I'm expecting to run down to 15700 range. If this level can hold, then we should expect to run up at least to the 16300 range. All right, so for the last pair we're going to look at today is the New Zealand dollar, US dollar. Now you can see since around June 1st that price actually tested this 74.50 level twice, hit it, and then shot up like a rocket. 900 pips in a matter of 4 months. That's a pretty strong movement. And in fact, you've seen most pairs rally very strongly against the US dollar. But one thing I'm looking at on this pair is over the last 2 weeks we're starting to see some rejection. And look at the wicks. You can see when price is really moving up, the strong wicks. You don't have a lot of wick on the bottom. It's pushing, but now you're seeing that the wicks are lengthening as they go, and a lot of the body of these candles is pushing near the bottom. What that's looking at is that there is a serious depletion of bullish momentum. I wouldn't say that there's this price push down is sellers rejecting the New Zealand dollar, US dollar long position that they're pushing short. What I am looking at is that it's gassing out. After a 900 pip push, though it has had some ups, and then you get some retracements, ups, some retracements, and then ups, and now we're in a retracement here. In fact, from this swing here to swing here, you can see here we have our price is really running down, leveling out right above the 50% retracement level, the Fibonacci retracement. And what I'm seeing here, though, is what we're trying to determine is the price going to hold here? Because this thing has continued to just push back, give me false signals that we're going to go up and continue to pull back. But with these rejection wicks, we may see a deeper level retracement on this pair, so I'm going to be very careful. But what I would really like to see is that this trend line would hold and watch the price continue moving up. So I'm going to be watching that. So anyway, that's it for the market preview. Feel free to leave any comments, and we'll give you more updates this week.